Okay, we are live. We're live. We're live. We're live. Today's a crazy day. Before we start, we're just going to look at the good old Bitcoin. Um, just to kind of show that it's just been a massive change. So today is a futures market review for NQ. However, we have hit the top and we've changed the state towards the downside on Bitcoin. And talk of the town today, as to be expected. I mean, like, if you just look at this run up from here to here. Now, don't take this with a grain of salt, because I am not a Bitcoin trader. However, I am definitely going to start averaging in. I'm not even going to talk about this. I'm not a financial advisor, but just a crazy day for the crypto markets. So we got Bitcoin just tanking. So we are over 50% now of the leg that led us up to the all-time high, and we could be headed to 70.5% is where I would like to see that go for an OTE sweep of liquidity. And we'll kind of see what happens. Is it going to zero with everything that's been coming out online? I don't know. Is it possible? I mean, yeah, of course it's possible. But you're telling me that there's not trillions of dollars sitting down here just on limit orders on the chance that this comes down this low? If it comes down this low, I would not be surprised if this just like ping pongs just to all-time highs. But I'm not a financial advisor. But I mean, it would make sense just trading, ICT concepts and analyzing markets, coming down to equilibrium, then possibly overshooting equilibrium to sweep out liquidity at a specific point in time that was used previously to send price higher to come into a discounted optimal trade entry zone to possibly go higher. I don't know. Maybe. Could be. I don't know. Ethereum. What's Ethereum doing? Ethereum, guys. Woo, woo, woo. Ethereum. I love Ethereum. Back, I guess I'll just say right here. I liked it right here. That was a good time. Good time. Yeah, so like, what's Ethereum doing? What are we doing? We're overshooting by quite a bit here. We came back down to OTE there. We got all-time highs. If we take this out to like a monthly, maybe. Yeah, but I guess what I'm seeing right off the rip here for Ethereum, we do have this trendline liquidity that has this low here that has yet to be taken out, and just massive amounts of liquidation. A lot of crazy things on the internet as well lately. So all that's being fueled. And without further ado, let's just go to the NQ, because that's what we trade, baby. That's what we trade. Okay, NQ. Today's delivery, we've been a little bit in a spiral downwards. Perfectly fine. We had these relative equal lows down here. We hit those. We came up. We retested IFED entry on the institutional level to then take it short again below possibly these lows. Okay, that's kind of what we're seeing here. If we wanted to look at any other types of methodologies, we got our PO3 range, gold Bach, if you're interested in that. There's no denying how well price respects these levels, and that is what I actually use to trade today. So what we'll do is we'll go through a little bit of a breakdown, ICT, and then we'll go over to MNQ, where I actually took the trades, and I'll throw the gold Bach levels on and kind of walk you through what I was seeing. You know, I should probably pull up my YouTube just in case there is anything on the chat, which I know there most likely won't be, but you know, whatever. Let's chill. Okay. We don't want that. We want where to go. Oh, they put it all the way up here. Now it's nice and tiny. All right. Now we should be good. Like my background. So good. All right. Pull up the other. Let's pull up Kick. Nothing happens on Twitch. I'm not even going to bother pulling that up. View channel. Look at, like, that's all you get in here is these people like, oh, we'll promote you. No, just stop. I don't care. I'm looking at the Kick chat right now, and there's, as soon as you start, they just have bots that come in and like, hey, let me scam you into you paying me. Nope. Not today. Not today. No way. Okay. So coming into Tuesday, looking for shorts in general, we've been trending in the downward direction, right? Pretty obvious. So coming into the morning, we are holding a little bit here. We had a little bit of a rally. So I got long on this going up, and then I got short on this going down. But we had this hourly POI here. H1. We'll go down to our 15-minute here. Okay, so the overnight session had a solid accumulation. And then we had a run lower, accumulation, manipulation, distribution, accumulation, manipulation, distribution, back to back here. So I'm seeing this as like the pre-market accumulation. This is our manipulation up. This is our distribution. Then this is our afternoon accumulation. This is our afternoon manipulation. And then a slow kind of walk the dog down, taking price into its objective here down below. I'm going to throw these fixing prices on just to kind of see where things are at. I actually need to update this code. I guess put the correct script on because I've updated things. So yeah, all right, we'll pull that up later. We did have news at 10 today, didn't do too much. I'll put our SMT on here, just see. Okay, nothing standing out right now. Coming into the opening session, you know, I'm just going to go down to the 1 minute because that's really like what I was looking at all day today. All right, so coming into the morning, we had a super solid sweep of this low right here. I'll mark that there. So we swept this low. I actually have a template for this. Let me put that on. Okay, so we accumulate, we manipulate, we distribute on a micro level, right? But this is actually the full accumulation, I guess, is kind of what I'm seeing here. Manipulation up, distribution down for the real move. But if we're just looking this, you know, on a fractal level, we have the accumulation, manipulation, a run on stops, and then we inverse this 1 minute here. Bing, bang, boom. We close, use it as support. We trade up into this area here, which I believe that area was, I think, a 15-minute possibly. Let me look. Yeah, so we had a 15er right here. Put the M5 on. Go back down to the 1 minute. Overall, solid price action today for sure. It was a very fluid day. I was able to be more patient today and then hold these for longer runners, which was nice. I'm going to try to make my execution video. I've been a little bit all over the place lately, and I've been not sitting down to take the time to do that. So I'll try to do that. So I have both of these trades on that video, and I'll be releasing that as well. So we close above here. We used it as support. This is also a order block right here. I should probably get in the habit of just marking everything out that I'm seeing for anyone who might be watching this in the future and is looking to learn ICT. It's the greatest of all time. And there's no doubt that it works. No doubt that it works. Don't believe all the hype you hear on the internet of blah, blah, blah. Trust me, in 10 years, ICT is going to be on the stock market floor in Chicago and in New York. Okay. So here we have, and prop firm desks, like legitimate prop firm desks. It's going to be a thing. I'm convinced of it. Okay. So manipulation down, inversion close here, use it as support. You have an order block. We then take this up to this level here. Okay. We use a 15-minute gap right off the consequent encroachment. We reject off. And then the second trade, so I'll mark out this guy here. And right here. Then we have this 1 minute gap here. There's a volume imbalance at the high of that candle. So I'll zoom in just to kind of show you what I'm talking about. I'm going to get rid of, so this blue box, sorry, I'm all over the place. This blue box is the regular trading hours opening range gap. Okay. I'll show you that first, and then I'll continue on with what I was going to say. We have our ETH down here. If you can see that in the bottom right, go to regular trading hours. Okay. So we have 16:14 p.m. from prior day. Market open at 9:30. Those are regular trading hours. Everything in between is electronic trading hours. So this is the gap between. We trade up to the 50% of that gap, use the consequent encroachment of this 15-minute gap as well. Then we trade lower. Now, what I was going to show you, I'm going to turn this off. When I say there's a volume imbalance between these wicks, I'm going to get rid of this position. Do you see how there is a gap between this high and this low? So the close of this open of this bullish candle and the open of this bullish candle. Click and hold your candle. The close 901.25. The open 901.50. Okay, so there is a gap between those two. So you include that being the full range of the gap. Okay. We then close below right here. Take this. Play a little shorty short. And you got a nice fluid run all the way. During a macro time as well, nonetheless. So it's a very, very solid play here. And then throughout the rest of the day, we end up coming up, tapping that hourly gap again, coming back down. And then we had the largest move of the day. So I think the best entry here that I saw, didn't take, but I saw, was this here, kind of like a 2022 where you have a high, low, higher, high, displace through, come back in for the first entry. This is your breaker entry right here. Breaker. Is that on the, I think it's this candle. Let me put that on there as the breaker, breaker. And then you use the gap again here. So breaker. You come back down, you trade back up to this area. Again, breaker entry. Right at the consequent encroachment, actually. So I'm going to get rid of this. So it hits that perfectly. And then you have another breaker here, actually. So this is technically high, low, higher, high, lower, low. Just like that there. Man, hindsight, I'll tell you. Breaker entry there. So a couple solid entries in general for the PM session. Where am I looking here? Breaker. And then just really starts to cascade down, and then overnight, or sorry, coming into Asia Open at 1800 is what I meant to say. Not overnight. Overnight is not happened yet. It is in the process of happening. So yeah, okay. So basically I just wanted to cover these two trades, have a little bit of accumulation. We then trade back up into this area here. So this was actually a breaker in itself here. So this looks like it's a high, low, higher, high, lower, low right here. So our breaker would be this guy, lowest down close candle right there. Or would it be this one? Because this is technically a high, low. Hard to say. Looks like it could be this one. Because this, if you zoom in, especially if you go on like a 30-second chart, this would be more obvious, but you have a high, low, higher, high, lower, low. So it's like a double breaker, actually. You know, does that make sense? Like, I'll put this in a different color. High, low. Maybe not, though. I mean, because like this is like a lower high. It's like a breaker mitigation. I'll put this in a different color here to kind of show what I'm talking about. So this would be like our mitigation block here. I'll put this in yellow. And then high, low, higher, high. This would be our breaker block. Which, did we hit those at all? Okay, so that would make sense. So anybody who thought this was going to be long here, we had drawdown for their position. So if you're long here, right, let's just kind of like think about this logically. Say you got long in here, right, looking for these relative equal highs or something, and you didn't use a stop, and you were like, oh my God, it's got to come back sometime. It's got to come back sometime. Okay. And you end up, I guess a better example would be maybe like around here-ish. Yeah, I mean, this would make more sense, right? Okay, I'm going to start this over, the explanation, because it's kind of getting a little wild. Say you're using this gap here as an entry. And I could just be talking out of, you know, don't believe anything I say. I'm just thinking about this for my own like sake. So just like imagine this with me for a minute, will you? We have this high, low, lower, high, right? And then we lower, low. I don't know if this is right at all, but I'm just trying to like process this for my own thoughts. I could be completely wrong, but say you get in on this dip down into this fair value gap thinking it's going to go higher, right? Or just say an institution gets in, there's accumulation, they're looking to long here, right? They're not necessarily using these PD arrays. Don't get me wrong. Like obviously they're doing their own way of trading because they're the people who move the markets. But whoever the hidden figures are, I mean, you're not going to meet them. So imagine they get long there, right? And we end up trading lower, and they have so much money that they don't really care. You know, they can hold their position because eventually, you know, it'll come back up enough to where they can mitigate those positions and then maybe bring it lower, right? But imagine you're underwater here this whole time, right? You're looking for a larger play, just thinking like an institution possibly. Again, I don't know what I'm talking about. So do not take any advice from me. But I'm just trying to, think about this logically, right? Institution longs here. They're underwater. They come back and they're like, okay, well, obviously this is like not going the way that we want. Price is showing that we're making lower highs. We're doing whatever we're doing with the crazy algorithms that we have in play for high frequency trading and, all that stuff. They decide that, okay, I'm going to cut my losses here, right? Boom, hits it, close positions, they pair orders, we dip down again, they get out of their position, right? And then we come back up and we're like, okay, so now we have a area that we're interested in to then trade lower. And then you have the continuation of the bearish order flow, creating bearish PD arrays, coming back to be used to then send price lower. And then they're peeling off positions, below this low and at they're rebalancing. So they're peeling off below this low, below this low. You have a retracement into an area that is deemed a premium of the range. Premium discount. Let me reverse. Right. So if you're thinking like from an institutional level, they have their position, they're peeling that off in layers, right? Underneath these lows, pairing with the opposite side of the marketplace, retracing, loading positions again, and then transferring down lower, building orders on both sides with a little bit of accumulation, taking out stops, and also putting on more position possibly here. I don't know what I'm talking about. Just keep that in mind. And again, this is also from this range in a premium where they're going to sell from, distributing down lower below these lows, these relative equal lows, right? And then they're building orders on both sides, loading more of their position. They're then creating this high to this low where they're going to trick people into going long. People who have been short from this position have their stop trailed to above either these highs and this high. They manipulate those stops out. They then trade down below this low and below, I guess not really that low yet. So just this low, peeling off a portion of their position, bringing it back to a premium. Oh, shoot. Or just the equilibrium, just shy of the equilibrium there, but you get the idea. And then the same thing all the way down. But yeah, okay. I just want to kind of cover that. And then now we'll go over to MNQ and look at the actual trades I took today because I have the execution still on there. So anything that you see that has these yellow and red lines are not trades that I took, but just trades that I was marking out as they were happening. Let me put this on here. I'm not logged in, am I? Okay, I am paper trading, so just keep that in mind. Today. All right. So, okay, so first position, we do have our Goldbach indicator on. I'm going to zoom out here, just going to give you a broader sense of like what that looks like. Holy sheesh, kind of crazy. Okay, so we have this rebalance zone. You rebalance, you then displace lower. Order flow gate, receiving bearish order flow, retracement at the high off of that 15-minute gap, and then lower. Okay, so I'm just going to go right back to the 1 minute here. Ooh. Okie doke. Okay, so we had 3 on here right as we had the inversion closure above this gap. It was a little bit different on MNQ. The gap here is not as wide as it is on NQ like we just saw. And then we trade above to this rebalance zone of the Goldbach layer, which also is the consequent encroachment of the 15-minute gap over here, which works perfectly. I end up taking 2 off there, and then I get my last one stopped at break even here. I immediately see that we're closing below this 1 minute gap. I immediately go short 3 contracts. I peel off one just before this low. And then just before this like blue line here, that's a part of the gold buck just before that, or at it. Oh, I guess I was at it. So that's cool. And then I had these ones that I was marking out as we were playing along the day. And basically I was seeing us reject this bottom area, strong closure, inversing all of this area on a higher time frame, 2, 3, 4, 5, 10 minute. I'm not going to look at it right now. Inversion of some type of formation here, gap. So IFEG play, and then taking this up from the low of this range, partial at this high here, also the high of the daily volume imbalance. And then the last one off would have been at the high here. And again, these are just mental trades. I'm just like getting used to trying to be more fluid with trading. This one ended up coming down here, respecting this. And I guess if you were to put quadrants on there, this would be a quadrant right here. And then take out these highs, stop to break even. And then we hit this little dotted line, which is a gold box zone. And then this one would have gotten stopped out at break even for the last contract. So the way I'm trying to trade is 3 on, 2 off for a TP1, and then 1 off for TP2. And then as soon as TP1 comes off, you have stopped to break even. That's kind of like the model that I'm trying to build for myself here. So, and then we have this guy here where we immediately inverse this set here. I want to say there was a 2 or 3 minute over there. Yeah, so we inverse this, we then come cascading down. But what I was looking at here, let me go to the 1 minute. It's probably more accurate what I was looking at. Yeah, so we were holding this here, right? So we came up the 3-4 minute candles here. We're holding this. So I put this on there. We came back up. We dipped to the CE almost, just shy of it. And then we ended up trading lower. Partial right at this area here, just before this low. So I tend to do like partials at lows, but I'll tend to do like just before, because NQ lately has been refusing to fully sweep liquidity. And I wonder if I could find a good example of that. Let me see. I guess, so like, I'll draw it out, right? So you have the bulk of the volume traded is in the actual candle bodies themselves, right? I mean, that's obvious. That's just the way the orders are placed. The candle opens, you have trading all the way up, trading all the way down. Where it opens and closes, the bulk of the volume in that candle is in the body, right? And what NQ's been doing, now just take this for example, like negate all the right-hand price actions. Say NQ came up and did terrible drawing, something like this, right? And then it's so bad. I'm just going to redo that. We'll do this with the path tool. I'm so sorry. Oh my God. It's just the worst. Okay. All right. So we got this here. Now, say NQ came up and it swept just the bodies here, but not the full wick, right? That happens a lot on NQ, especially when we're in trapped order flow. I think we're headed out of that trapped order flow now, because if we look on the daily, oh my God, look at these candles are crazy huge. Oh my gosh, help me, Lord. Okay. All right, so when I say trapped order flow, we've been squeezing, right? We've been squeezing here, we've been squeezing here. We finally broke out of that. So today is the day where NQ decides a direction. And unfortunately, that direction is down. So we'll see what happens over the next couple weeks. But, that point aside, I tend to put my partial levels at the bottom of a high, but lately, because we've been in trapped order flow, I'll do it just before, right? So we sweep out the body, and then possibly, I was thinking basically like, okay, we sweep this out and then we come back and then I get stopped out at break even, right? But we ended up coming down, and then, yeah, I don't really need to explain the rest of these trades because I didn't actually take these trades themselves. It was something I was just looking at, and I don't really know if anyone's really interested in even me talking about that in general. I took 2 losses here, and then I took one more small scalp here back to the volume imbalance. But the main 2 for the day were these guys here. So super solid trades. I was much more patient with these trades, waiting because I had clear targets that I was looking for. And yeah, so they ended up playing out. So that's kind of the rundown for today's price action. Pretty cool, pretty cool. We'll go back to NQ here. Maybe we should actually go to Bitcoin and see what's going on here, because this has been going crazy today. Oh, wait, this is... We're on the 1 minute chart. Of course, it's going up. Yeah, all right. Makes more sense there. Weekly. Okay, we're going to end it here. Just want to do a recap of what was going on for today's price delivery for NQ futures. We did touch base on the state of Bitcoin and Ethereum dropping precipitously. I would like to see them come to OTE, Bitcoin in particular, at least to this level, and then kind of see where we go from there. If we overshoot 50K, this shit's going to zero, dude. But if we don't, if we hover around here, like a slight, little trip up here, maybe below these lows, like we have like a last opportunity, before like complete destruction. But like I said in the beginning, like, you don't think somebody has like a limit order of like $1 trillion here to like bring this way back up, unless like this actually is just going to not be a thing. I mean, there's like huge server farms and stuff that were just built in the last couple of years, and in particular for cryptocurrency, so I don't think it's going to be going away anywhere anytime soon. I think this is just a planned liquidation to then, regain some of that value to then hold all the value so everyone else doesn't have it kind of play. But that's for a different time, different place. And that was today's review. And hopefully you guys found that insightful. All one person that watched this for the 30 seconds they were on. But yeah, so interesting times. Crypto markets are crashing. Very exciting. Could be, early 2020s, back when it came down to, sub 20,000. And then Ethereum was at like the $100 level, 90, 80 to $100 level. I mean, that was prime time. Like, we were up to like 1,500 here, and then we came down to like $100. That's like prime time. What are you talking about? That's amazing. So much opportunity. But liquidation. Is it going to zero? Nobody really knows. I doubt it, but nobody really knows except ICT. Apparently, if anyone's gonna know, ICT is gonna know. I'll tell you that. If anybody's gonna know, ICT knows. All right, so we're going to end it there. I'll catch you guys in the next one. Peace.